Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Thursday, April 27th, 2023. I want to just encourage you to please click like if you would and subscribe to the Wicked Stocks YouTube channel. It'll actually help both of us. Clicking like helps us get found better on YouTube when people search for Tesla and Apple analysis. And becoming a wickedstocks.com YouTube subscriber helps you. You'll be notified each and every time new content has been uploaded for your viewing. Just want to encourage you to also check out wickedstocks.com, where not only do we put out daily analysis in the SPY and the triple Q, just like you see in Tesla, but also weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks every week that you never see on YouTube. So here we are, at 223.54. This longer-term channel top remains our ceiling, really, at this point in time, into later year, through the rest of the year. Not until we get above 223.54 do I see Tesla showing meaningful longer-term buying that should play out through the rest of the year. And I'm just not going to go there just yet because it is so far off the mark. We need to see where the low is. We may be in the midst of it right now. We tested this channel bottom to the tick, actually broke below it just a bit, but we have satisfied the test. It's at 153.39 today. It's a 4-star level you can see in the bottom right of your screen. That is the beginning of a range down to 146.06, as I've been saying, a gradually narrowing range because 153.39 is dropping ever so gradually that can absorb selling pressures through May. And from here, we can, over the next month or two, claw our way back into the low 200s. The 223.54 long-term channel top I showed a moment ago is dropping steadily, and we have new channel resistance well above the market. So I'm going to work up from here today. Once again, this area has been a target for the last 2 or 3 weeks, following a sell signal about 3 weeks ago below the 196.50 channel bottom. Now that we've met the objective, we can spend time down here perhaps for a few days, for a week before turning up, or we could spike our way right out of here. It's difficult, obviously, to determine that, but this is your bottom picking territory. This is also your short covering territory, and by that I mean whether you were short the stock based on the sell signal a few weeks ago, or whether you bought those 155 or 145 out of the money puts a few weeks ago. This is where you cover. And obviously, if we close below 146.06, that would be another sign of significant weakness, and then you'd climb back on, presumably. And I'll get to that actually in a moment. But for right now, you're covering your short positions and perhaps reaching, if you're a near-term trader, in other words, a 1 to 2 week time horizon trader, you hold positions for a week or two, it would be the 174.14, I think, as a realistic objective. Above 153.39, this channel bottom, as long as we continue placing daily settlements at or above it, this is a market that can rally over the next, I'd say by the end of next week, quite possibly, to 174.14. Combination descending 1/3 speed line and channel top. So as we're testing the 153 area support, you could reach for 172, 174 out of the money calls that don't expire for at least a week. You may go a little further out. And while you're at it, if you're more of a 3 to 5 week position trader, kind of a near-term investor, you may reach for the 200, 201 out of the money calls that don't expire for at least, I'd go a couple of months out on this. I will say that if, say, by the end of next week, we settle above 174.14, we're probably just a couple of weeks away from reaching that 201.87 channel top. And that is roughly the location, as I started this video, where this channel top is now. It's not at 208.82. So I'm going to get back to, let's see, which chart do I want to show? I'm going to go back to this one because I'm not done with it. 160.09. I'm going to roll the chart down just a little bit so you can see these levels. You've got 153.39 down to 146.06. This is our zone down here. This is our base of, I'm going to call it midterm support, not long-term. For me, midterm is like containing 3 to 5 week selling pressures, maybe 1 to 2 month selling pressures. Long-term resistance is at least monthly, quite possibly quarterly or annual buying pressures, which is what we have with 223.54, well above the market. So testing midterm support in the 146.06 to 153.39 region, allows the market to recover by the end of next week to 174.14 and by the end of May to 201.87. On the way up today, we do have a meaningful short-term channel top, and by that I mean 1 week in the making at 160.09. This level may well contain daily buying pressures. We could fill that area in between 153.39 floor and 160.09 day ceiling for the entire day. But I will say that let's talk about pushing through 160.09. We could, under that scenario, short cover rally to 168.36 is possible. That would put us up right about here. And if we then close above 160.09, that is our indication, good weekly low. And if you haven't liquidated those puts you may have bought a few weeks ago, that would be a good sign to do so, because now we've got recovery, at least the early stages of recovery after having tested 153.39 midterm support. It'd also be a good time to reach for the 172 out of the money calls, or to go long the stock itself above 160.09, settlement above 160.09, 2 to 3 day rally, 3 to 5 at the most to the 174.14 area, where, I might add, we could actually top out through next week and fall off again back into the low 150s. This could be kind of a battle here for the next week or two. It would be a settlement above 174.14 that would tell me good low through the balance, through May trade actually, because the following 2 to 3 weeks, then anticipating 201.87, where we actually could top out not only on a weekly, but perhaps even monthly basis. So we haven't even updated these numbers here I see in the upper right. That still needs to be done, but far off the mark. Let's talk downside. If things get ugly today, and I mean not just breaking 153.39, because under that scenario, I do think 146.06 is in reach. I will mention the location, and I know you're aware of this. Where are you? Is this it? Yes. So there is this channel bottom that's actually been performing pretty well. It's been a minor point all along. Under other conditions, if it didn't interfere with this more meaningful horizontal structure, I would have called this a 2 or a 3-star support level, but it's been holding nicely. We closed pretty much right in its vicinity. It's at 152.28. I'm only mentioning it because if we break 153.39 on Thursday, 152.28 is still there, as is 150.84, but if we break or open below 153.39, you should certainly allow for 146.06 intraday. And 146.06 is a 5/8 downside Fibonacci from the January low to the February high. It's also lining up pretty well with the 147.60 channel bottom. There's just a lot going on there. This zone able to contain selling, 146.06 to 153.39, once again through May. And from here we can recover nicely. But if we close below 146.06, all bets are off. We enter another 2 to 3, 3 to 5 week sell signal back to this January 101.81 low. And there's a full channel extension now too, which I like to use as a targeting mechanism. In other words, this channel structure here, if you double it and drop it down here, this is a full channel extension. These are great targeting mechanisms. I use them for years. Whether you consider this solid support is another question altogether, but in terms of reaching an objective, there you have it. 104.91 would become our next 3 to 5 week target if we were to settle today below 146.06. And so if you bought those 172 out of the money calls, or you bought the 201 out of the money calls, you should liquidate them if we close below 146.06, and consider buying 101, 102 out of the money puts that don't expire for at least a month. You may go a couple of months out on that. And I will then also mention, and I just want to mention this possibility, that if we close below that 146.06 area that I just showed, there is the possibility for outright longer-term bearish continuation back to this long-term channel bottom that is presently in the 50s or the 60s. But I want to call this stair step. I want to say that if we close, below, where are you, 146.06, yes, we can expect the very low 100s. And only if we close below the very low 100s would we then expect that long-term channel structure once again. But, I think that is remote still. This thing is dropping at a very steep pace. And honestly, as we move into later year, it's already zero. That's not going to happen. So anyway, we'll take a close look at that if it is required. But for right now, I'm just going to leave you with what is the proper chart to leave you with that you might freeze frame. Here it is. This is it for the day. Closing above 160.09, good low for the week. The 174.14 area expected within several days. And that, my goodness, 11 minutes and counting. That's all I've got for today's Tesla report.